In the metals quadrant, taking a look at the February gold contract, which has now put together 2 consecutive positive sessions and is breaking out above key moving averages like the 50-day, as well as a rotational high on December 26 and 27, along with the low on December 30th, formed a double bottom pattern, a traditional W pattern that you can see on a chart, which may have today triggered an informal target above $2,700. The high today, 2674.20, was up 1.25%. The low 2636.10 was only down just short of 0.2% from yesterday's settlement at 2641. And with a little bit of time left in the session, we're still up over 1%. Some correlations are fading with gold. In the short term, the typical inverse correlation of gold to the US dollar has switched to plus 0.47 over the last 30 days. That means that 47% of the time, gold and the US dollar are moving in the same direction, and we had a big jump in the dollar today in the aggregate. Typically, historically, that correlation is inverse, somewhere in the range of minus 0.4 to minus 0.8, or negative 40% to negative 80%. Even going out 180 days, the correlation is still at minus 0.16 or minus 16%. I don't expect this to be a long-term phenomenon, but it is something to pay attention to, as the dollar was stronger today and has been stronger recently, and gold is moving in the same direction. That could be because market participants were looking for safety. In other words, some of the activity in the gold contract, possibly the dollar contract as well, could be interpreted as a flight to safety with some of the headlines that we saw in the news. But as you look out toward today, gold definitely in a positive short-term trend.